Our discussion will be for Unit 10, 11 and 12. These three units are more related to the evidences. We will learn how to develop an approach if you want to apply the analytical procedure, substantive test, and then if you want, how you can check the account receivable, account payable, and cash. Opposite to this, the purchases and the cash, the sales, credit sales and cash sales of the company. We'll start our discussion, Unit 10, Evidence, Objectives and Nature. In this chapter, we will learn what is the nature and sufficiency requirements, what is the definition, and what as an auditor we should know what we consider, what is sufficient evidence, and what is the nature of the extent and timing of the transactions and the accounts. For the confirmation process, when we want to take the third party confirmation about some balance, auditor directly approach the debtors or creditors and they want some confirmation of the balances or some transactions. What should be the necessary procedure for the confirmation? What is positive confirmation? What is negative confirmation? What if there is no answer from the customer or from the suppliers, means account receivable and account payables? What could be the audit documentation that they have to maintain? Typically, as we know, the one audit file, broadly it has two portions. One is the permanent portion, one is the current portion. Permanent portion has those things which is like a permanent nature of the transaction. For example, the trade licenses, your long-term contracts. And current portion, as we know, that for audit schedules, day-to-day working, your trial balances that you kept it for the working. And in the last we'll discuss in this unit the computer as an audit tool, because we know that we have computer assisted aided softwares, which shortly we call as CAD. That how advantageous these are, what are the disadvantages, what is the complication, what is required to apply these things. This we will discuss in the computer as an audit tool. Now, every auditor should obtain sufficient audit evidence by performing audit procedures to afford a reasonable basis from an opinion regarding the financial statements which are under consideration for the audit. This we have been repeatedly discussing, that auditor will express an opinion on the financial statements. He will express an opinion for the controls as per Sarbanes-Oxley guidelines. So for that he needs sufficient audit evidence. So what is an audit evidence? Audit evidence is all information used by auditor in arriving at the conclusion on which the audit opinion is based. Shortly, it is documented evidences which can be shown, which can be proved, which have authenticity in nature. And accounting, what are the accounting records? These are initial entries. It can be manual, it can be electronic. It may be a supporting document, that is checks and the EFTS, invoices, contract, and JDs, journal entries, worksheets, spreadsheet, and the reconciliations. So these are some nature of the accounting records, but a lot of accounting records are there. Then some evidences can be achieved from the other sources, that can be the minutes of meeting, industry analysis, competitor control manuals. This will help the auditor for the analytical procedures, that you can compare yourself with the industry. What is the industry customs practice, what is the practice here in the company, is it logical or not? Then surely auditor is going to typically relies on persuasive rather than on convincing evidences. He should not be relying on the convincing of documents. There should be persuasive, which has a specific, definite, reliable information on that one. Auditor may consider the cost of obtaining evidences and its usefulness, because in audit always we have to see the cost and benefit relations. If the cost of an audit is higher, benefit is less, then according to the cost and benefit principle, it's not prudent to spend money on that one. Financial statements implicitly or explicitly include management assertions about the fair presentation of the information. Now we will discuss the assertion. What are the assertions? There are typical assertions that we are going to discuss in this chapter, and in the later units we will keep applying that one. For example, completeness, accuracy, valuation, measurement, disclosure, and cut off. These are typical financial assertions that we have to see. That if it is a liability, what would be the financial assertion we have to check. If it is an asset, what financial assertions to be checked. Then for expense, income, shortly for equity, there are mainly 5 broader categories for balance sheet and income statement. So financial statements will be done like that. What is sufficiency? Sufficiency is the measure of quantity of evidence. The greater the risk of material misstatements, the more evidence it will be required. If you get more fear about the reliability of the information, surely you need a lot of evidences and it will support your sufficient audit. Appropriateness by definition is the measure of quality of evidence. It is relevance and reliability of the evidence. Evidence is generally more reliable when it is obtained from independent sources. Now that's why when you are talking about account receivable, you are talking about accounts payable, auditor will always prefer to directly send a confirmation letter to the parties. So the independent evaluation or the communication information sources are always most trustable. Then generated under effective internal controls. If your control system is effective, then it will be considered as the appropriate. Obtained directly by the auditor, exist in documentary form and consist of original document rather than on photocopies. Audit procedure for obtaining audit evidences. Now, as we know with our previous knowledge of this audit, that first step is the risk assessment. That in the planning stage we see where the entity stands, what is the risk of material misstatement. Then supplement to that we test the test of controls. So these 2 things we are very much familiar. Substantive procedures are used to detect material misstatement at the relevant assertion levels. It can be an account level, it can be overall financial statements. Now substantive procedures are of 2 types. One is the test of detail of transaction, that you can check each and every voucher, JVs, cash payment, cash received, bank payment, bank receipt, or fixed asset purchase vouchers, every kind of voucher. When you go in detail testing, this is test of details. The other is analytical procedure. Analytical procedure is showing the analysis. Like you are comparing 2011 with 2010, you are comparing the change in sales over 5 years, you are comparing the sales with the cash, you are comparing sales with gross margins, sometime with the net margins, sometime with the receivables, movement of inventory or shipment. So in a linkage of certain variables, applying the ratios for calculating the sales turnover and the sales profit margins, gross margins, and the sale utilization efficiency, debtors turnover period, debtors days outstanding in sales. These all variables, when you link, you get an approach that what is the quality of the information. Now, what are the types of audit procedures? Generally, inspection of the records, you personally inspect them, the tangible assets, you observe, and then you make inquiries for the information. Confirmation is very important. This will we keep discussing in this unit, that confirmation will make the information more authentic, because the outside party's confirmation is the top most reliable information in normal circumstances. Then recalculation of the certain arithmetical accuracies testing, reperformance, sometimes you reperform the complete cycle as we discussed, the walkthrough test, and we apply the analytical procedures. So broadly, if you see, every auditor uses inspection, observation. Observation is when it is an external audit, it's a year end, you go for the physical stock count, physical stock taking, you will count the stock, and someone will observe. Then inquiries asking from the management, confirmation, recalculation, reperformance, and analytical procedure. These are practically used. Now, when you are using electronic devices and you are in the more IT environment, then surely documents are not placed in a traditional way, that you have voucher, then you have supporting documents. Then majorly the system auditor will be more helpful in that situation. For that, for example, transaction in electronic commerce may occur solely by the exchange of electronic messages. Then image processing system may convert document to the electronic images with no retention of the source document. And the auditor response may include performing audit procedure using CAD, that is computer assisted audit techniques. So in electronic environment, when you don't have trails, it's a direct online invoice, you didn't generate the PO, there is no receipt, GRN, there is no invoice, it's just one transaction, online things will be delivered. Shipping documents will be the same as we discussed previously. The first few procedures will be little change in the electronic environment. What are the direction of testing? You can see the completeness test starts from here, and existence and occurrence start from here. You can apply the overall financial statement assertions to check the overall accuracy, or you can check the economic events that are transactions. Day-to-day transactions will be economic events. Then other information, you can see the accounting records, and then you will go for the financial statement assertion. This is to see the completeness and the existence and occurrence test. You can do it in the meanwhile. Now let's discuss the confirmation. This is very important because this is the biggest evidence that you could have for supporting your decisions. Now, confirmation is the process of obtaining and evaluating a direct communication from a third party. You request directly suppose I am a company, I will write a letter to my customer to give a direct confirmation to our auditors. So this will be an independent evaluation. He will send one statement, maybe the one standard confirmation letter signed and disclosing the account balances, and one auditor has from the client, one he get it from your customers. So both way he can compare it in the way that it is in a line, there is some difference or something like that. Now for confirmation, first of all you should select the items what to confirm, because if you are going to audit a company, they have 200,000 receivables. So you cannot send 200,000 confirmation letters. You have to go for a sampling. So there should be some criteria to select the item for the confirmation. Then you have to design the request. That is standard format, as we know. Communicating the request to the appropriate third party, obtaining the response, evaluate the information, and then you will see the greater the assessed risk of material misstatement, greater the assurance you need to obtain from confirmation than the biosubstantive procedure for usual and complex transactions. Now there are two types of confirmation. One is the positive confirmation and one is negative confirmation. Sometimes if I want to confirm something from you, I will request you, if it is wrong, tell me. Or if it is okay, no need to tell me. There could be two situations. So, the positive confirmation request a reply regardless of whether the respondent agrees with the information stated. If you are agree, still you have to reply something. And for negative confirmation request, the recipient to respond only if he disagrees. So it depends upon the professional judgment of an auditor that what kind of confirmation he is looking for a specific balance. If he believes that the risk of material misstatement is more into this account, this balance, then he will go for a positive confirmation that he has to, the party has to reply to his concerns, so he can get a direct confirmation. But for those accounts where he feel no, there is no such materiality risk is involved, he can ask for a negative confirmation. So it's up to his judgment that how he wants to use. Now the auditor may consider information from prior year audits or the audit of similar entity. This is in the analytical procedure. You know, when the auditor is going to compare something with the industry, with the same company, with the last year, with the trend analysis, this is the analytical procedures. And when designing request, the auditor should consider a type of information he is looking for, and the auditor should direct the confirmation request to the knowledgeable third party. Now, performing confirmation procedure. The auditor should control confirmation requests and responses during the performance of the procedure. What he has to do, control means direct communication between the intended recipient and the auditor. When responses other than mailed written communication are received, additional evidence may be required to support their validity. And oral confirmation should be documented. That sometime what you do is you can communicate with me, and then you said, okay, with reference to our telephonic conversation, we agree on this point, and you put it into a proper email or a letter or something, you know, make it documented. Then the confirmation of the account receivables. First of all, we should know what is the account receivable. When you sell some stock, some items on credit, so your customer owes you, so it becomes your receivable. These receivables are the entity claim against customer arising from the sale of goods and services in the normal course of the business. Now, confirmation is a generally accepted audited procedure. This is, everyone know, this is commonly accepted that confirmations, the auditor will request the client to arrange the confirmation for him. An auditor who has not requested confirmations in the examination of account receivables should document how he overcame this presumption. If someone is not opting for confirmations, then what is the supplement he is going to trust on? So this he has to disclose in his working papers. Now let's discuss the audit documentation. Audit documentation, that is working paper, must be prepared to provide a clear understanding of the work performed. It includes all the documents, that is the necessary part of audit plan, execution, scheduling, selection of the audit trainees to be sent on the client, and time framework. Audit documentation serves the other purposes, like it assists the audit team to plan, then the assisting new auditors to understand the work performed. Suppose this year the auditor is changed, the guy who will go on the client. Now when he take the old file, say file of 2010, and this file is made by some other auditor, So the beauty of the audit documentation is this, that he should not ask the information from anywhere. The file should be sufficient to explain the audit procedures that performed last time, what were the issues, all necessary information should be there. So a comprehensive audit file, audit documentation will be that, which does not require the physical presence of the person to share and explain that what this file is about. So that's why we prepare the audit documentation, and it helps the new auditors and the overall planning, and it gives a clear path to the supervisor also, that where they are going, what is the procedures, who is checking liabilities, who is checking assets, then who is compiling, who is the reviewer, who is the supervisor, what is the tentative dates, what were the issues, what observation they find out, what was the management answer to it.